Good morning, everyone. Okay, so you're supposed to start from this accounting relating to electricity company, right? So we have got three special categories wherein the financial statements will be prepared based on their respective law. Okay, so one is accounting for the banking company, insurance company, and then electricity company. So banking company we have already completed. So today we'll be starting up with this electricity company, and subsequent chapter would be what? That would be with respect to your insurance company. All right. So let's start up with this accounts of electricity company. All right. So India is the third largest producer and second largest consumer, okay, of electricity. Okay, so not required again, just for the general knowledge, you guys can just remember this. Okay, so third largest producer and second largest consumer, okay, worldwide. With an installed power capacity, you need not remember this. So this huge demand of electricity is met by the power generation and distribution company in India, which includes thermal power generating companies, hydropower generating companies, and companies producing power from other renewable sources. Okay, so what is important in this particular chapter is how exactly do we account for certain transaction and how exactly are we supposed to prepare the financial statement. That exactly is important. All right. Okay, when it comes to regulatory framework for electricity company, okay, so what and all are the laws, okay, which will be regulating these particular electricity companies. So first thing is Indian Electricity Act 1910. Look at the year, okay, so very old law, 1910. Electricity Supply Act 1948, immediately after independence, and then Electricity Regulatory Commission Act 1998. Clear? So these are the regulating act which will be governing these electricity company. Okay, so Indian Electricity Act, Electricity Supply Act, and then Electricity Regulatory Commission Act 1978. Okay, so the provision of this act extends to whole of India. So this act is applicable for the entire nation. So let's talk about the main features of Electricity Act 2003. Okay, so this is the latest Electricity Act 2003. So following are the main features of Electricity Act 2003. The activities like generation, transmission and distribution of the powers have been separately identified. Generation of electricity should be a separate transaction, transmission should be considered as a separate transaction, and same way with respect to distribution of the power, even this has to be considered as a separate thing. Okay, so all these three activity, okay, so generation, transmission and distribution are considered as three different activities. All right. So power generation has completely been delicensed except for hydropower projects and other, over a certain size. So power generation has completely been delicensed. Okay, so it's not that everybody are allowed to generate this particular power. No. Okay, so except for hydropower projects, it has been allowed. Okay, so other than hydropower project, other entities are not allowed to generate this particular power. Okay, because electricity is something which should not be in control of everybody, right? So that's why it has got limited people, okay, who will be generating this particular power. Then the next thing is 10% of power supplied by the suppliers and distributors to the consumers have to be generated using renewable and non-conventional sources of energy. So out of the total power supply whatever is being made, 10% okay has to be supplied by the supplier through what? Through generating the power by way of renewable and non-conventional sources of energy. Clear? So government is also encouraging, okay, so people to generate the power through these particular renewable and non-conventional sources. Simple? All right, so let's look into the next point. Okay, so setting up of State Electricity Regulation Commission has been made mandatory. Okay, so it is mandatory that every state should be having State Electricity Regulatory Commission. Okay, each and every state will be having its own regulatory. Okay, so appellate tribunal to hear appeals against the decision of CERC and SERC. Okay, so this is Central Electricity Regulation Commission and this is State Electricity Regulation Commission. All right. Okay, Ombudsman scheme for consumers grievances redressal has been introduced. So whenever the consumers have got any complaint, that has to be heard and resolved. The next thing is provision has been incorporated for private license in transmission and entry in distribution through an independent network. Okay, so then the next thing is metering of all the electricity supplied has been made obligatory. Okay, so everybody has to be having an electricity meter which will be reading how many watts of electricity is being consumed or used. Okay, so provision relating to theft of electricity have been made stricter. So earlier people used to steal electricity, right? So from the main electricity wire, okay, on the electric pole, they used to steal the electricity, but here the provision has been made stricter, okay, with respect to stealing of this particular electricity. All right, let's look into the next thing. The role of Central Electricity Authority. All these things are story, guys. They'll not be asking much of questions from these particular areas. Okay. Okay, let's look into the next point. The central government has the power to constitute a body called as Central Electricity Authority, generally to exercise prescribed functions and perform prescribed duties. Okay, so central government has got the authority to initiate a particular authority called as Central Electricity Authority. Okay, so what will be its role? Its role would be to act as per the prescription which is being provided by the central government and perform the duties whatever has been prescribed by the central government. Okay, so the office of Central Electricity Authority is an attached office of the Ministry of Powers. The Central Electricity Authority is responsible for the technical coordination and supervision of the programs, okay, and is also entrusted with prescribed statutory functions. Okay, so this would be the regulatory authority, Central Electricity Authority. This will be responsible for what? For technical coordination and supervision of the program. So whatever programs and provision has been initiated, so Central Electricity Authority should make sure that all these provisions and programs has been carried on in a smooth manner. Okay, so let's look into the next thing. The Central Electricity Authority shall consist of not more than 14 members including the chairperson, of whom not more than 8% shall be full-time members to be appointed by the central government. So totally this particular Central Electricity Authority should not be having members exceeding 14 including the chairman. So one chairman and 13 members. Out of these 13 members, 8 members shall be full-time employees who will be appointed by the central government. Okay, you can either call it as full-time employees or members who shall be appointed by the central government. The central government appoints one of the full-time members to the chairman of the authority. Okay, so out of these particular members who is appointed by the central government, one person shall be considered as the chairman or chairperson. Okay, role of Central Electricity Regulatory Commission. Okay, remember I told you we have got Central Electricity Regulation Commission as well as State Electricity Regulation Commission. So let's talk about the role relating to the same. The Central Electricity Regulatory Commission shall be a body corporate having a perpetual succession and a common seal, with the power to acquire, hold, dispose of property both movable and immovable, and to contract, and shall be by the said name sue or be sued. So all the features, if you see, this is similar to the company. Okay, so it is a body corporate. Okay, so once it is registered or incorporated, it will be having its own name. Okay, so it will be having perpetual succession and a common seal. It can buy the property in its own name. Okay, so it can sue somebody or get sued. Okay, so these are all the features of company. So this Central Electricity Regulation Commission also will be treated as a company. Okay, so which will be treated as a body corporate having perpetual legal succession, common seal, and it can buy the properties whether it is movable, immovable. It can buy in its own name, and then when it comes to putting a case, this particular body corporate or company can put a case on somebody, or somebody can put a case on this particular body corporate. Easy. Okay, so let's talk about the Electricity Regulation Commission. The Central Commission shall consist of the following members. Okay, so a chairman and 3 members. So one chairman and 3 members. The chairman of the authority, who shall be the member ex officio. Okay, so the chairman shall be the member. Okay, so the chairman also will be a member excluding this particular other members. The chairman and members of the Central Commission shall be appointed by whom? By the central government, because this is Central Electricity Regulation Commission, right? Correct. So all these particular members and the chairman will be appointed by the central government. Okay. The functions of Central Commission include regulating the tariff of generating companies, the interstate transmission of electricity, to issue license, to levy fee, fixed trading margin, etc. Okay, so these would be the roles and responsibility of this Central Commission. What will it do? It will be regulating the tariff. Okay, so whenever there is any interstate supply of electricity, okay, that will also be regulated by this particular commission. It will be responsible for issuing the license, okay, to levy fee and to fix the trading margin. Okay, so the price, everything will be fixed by this particular Central Electricity Regulation Commission. All right. So then they are given State Electricity Commission. Okay, so role of State Electricity Commission, what exactly will be the role and responsibility of this State Electricity Commission? Let's talk about it. The State Electricity Commission shall be a body corporate having perpetual succession, common seal, with the power to acquire, hold and dispose of property both movable and immovable, and to contract, and shall be in the said name sue or be sued. Exactly the same paragraph, right? Even this would be considered as a company which has got perpetual succession, common seal, a separate name. It will be treated as a body corporate. Okay, so even this can purchase any property in its own name. Okay, it can sue somebody or get sued. Okay, so let's talk about the functions. So when it comes to functions of State Commission, it includes determining the tariff, okay, supplying, transmission and wheeling of electricity companies, okay, wholesale, bulk or retail, regulating interstate transmission of electricity, issue license, levy fee and fixed trading margin. If you see the functions, it's quite similar. Okay, only thing is when it comes to State Electricity Commission, so it will be issuing state license. Central Electricity Commission will be issuing central license. Okay, so both the cases the tariff will be fixed. Okay, for this particular state. Now when it comes to electricity price, it's not same like throughout the nation. Okay, each state has got different rates, right? Correct. So the rate which is prevailed in each and every state will be determined by whom? It will be determined by State Electricity Commission. Okay, so the State Electricity Commission will be regulated by the Central Electricity Commission. Easy. Hope you guys are able to follow. All right. See guys, all these theoretical part not much relevant. Okay, so if there is anything which is relevant or important, don't worry, I'll be writing it in the notes. Okay, so all these part not much relevant or not much important. Clear? Alright, so let's talk about the important aspect relating to this chapter, that is accounting for electricity companies. Alright, so accounting of some special transaction. So just like how we discussed accounting for some special transaction when it comes to banking company, remember? So interest on deposits, okay, if it is doubtful, how exactly are we supposed to treat it? Okay, rebate on bill discounted, how exactly are we supposed to treat it? Secured and unsecured loans, how exactly are we supposed to show it in the financial statement? So same way even over here, we'll be discussing few special transaction. The very first one is accounting and reporting of security deposit. Okay, this is what is important. So let's just write the notes relating to the same. Accounting of electricity company. Okay, so let's talk about accounting of some special transaction. Okay, first special transaction over here would be what? Accounting and reporting of the security deposit. Okay, so these electricity company, they'll be collecting some security deposit from the people who will be using this electricity. How exactly are we supposed to account for it? And what about the interest on these deposits? How exactly are we supposed to account? Okay, so accounting, this would be the first special transaction. Accounting and reporting of security deposit. Okay, so as per condition of supply, all the state electricity board are empowered to collect security deposit from their consumers. Okay, any person for that matter who is consuming this particular electricity has to pay some security deposit. Initially, he'll be paying some security deposit. Since consumers are required to make the payment of electricity consumed on a post-pay basis. Okay, so security deposit collected from the consumers act as a cushion against the possible loss due to non-payment by the consumer. Okay, so when it comes to this particular security deposit, when do you think these people will be paying? These people will be paying after using, right? I use the electricity for a particular month. In the next month, the bill is generated and only then I make the payment. Correct? So In order to avoid this, electricity companies or these regulatory authority, what they'll be doing is they'll be collecting some security deposit, so that if the person is not able to make the payment, okay, relating to electricity bill, we need not worry, we have already collected some amount in advance in the form of security deposit. Same is the case with respect to rent, guys. Okay, so why do you think the owner will be collecting this security deposit? He'll be collecting some advance amount from you, right? Correct. Well, let's say 2-3 months you don't pay the rent. Okay, the owner need not worry, because he already has got this deposit money with him. Okay, so let's say all of a sudden you vacate the house, okay, without informing to everybody, without paying any rent. The owner will not be having any headache. Why? Because he already has collected some security deposit from you. Okay, so same is the logic even with respect to this electricity company. Okay, so all the states shall be authorized to collect some security deposit from the consumers. Okay, so as the consumers will be paying the bill, on a post-paid basis. Okay, so on a post-paid basis, in order to avoid the risk of non-payment by the consumers, the security deposit is collected. I hope everybody understood why exactly this particular security deposit money is being collected. All right. Okay, so let's talk about the legal provisions relating to the same. The legal provisions relating to security deposits are as follows. Okay, the distribution license may require the consumers to deposit sufficient security against the estimated payment which may become due to him in respect of electricity supply to the consumer. Okay, so the distribution license may require the consumer to deposit sufficient security against the estimated payment. So what exactly will be the estimated payment of electricity bill over a period of subsequent years? Based on that, some amount will be determined, and that amount will be treated as security deposit, and the same will be collected. All right. The distribution license shall pay interest equivalent to the bank rate or more, as may be specified by the concerned state commission on the security, and refund such security on the request of the person who gave such security. Now, this particular electricity board, they'll not just be collecting the security deposit, but they'll also be liable to pay some interest, which will be equivalent to the bank rate or more than that. Okay, it is left over to the decision of the electricity commission. All right. So whatever is the amount, okay, which they are supposed to pay, okay, the security deposit, along with this deposit, they'll also be liable to pay what? They'll also be liable to pay this interest amount. Is this clear? All right. The amount of security deposits from the customer shall be determined as follows. Now, how exactly do they determine this particular security deposit? Look at this. The load into load factor of the category in which the consumer falls into billing cycle plus 45 days into current tariff. Okay, just try to remember this. Understand this particular formula. Whatever is the total load, okay, into the load factor for which this particular consumer will be falling into, okay, into what? Into billing cycle. Okay, so whatever is the billing cycle plus additional 45 days. So even if he is not paying the bill for the current month plus 45 days, this particular electricity generating or supplying company need not worry, okay, because they already have security deposit equivalent to the billing cycle as well as subsequent 45 days, okay, into current tariff. Okay, so whatever is the tariff rate, you will get to know the total units which is used, okay, by just multiplying this load factor into billing cycle plus 45 days. Okay, so billing cycle, let's say it is 1 month or 30 days, 30 plus 45 days, that is 75 days amount will be collected in advance, okay, into whatever is the tariff rate, okay, that is per unit, whatever is the electricity charges, okay, so that will be used. Okay, let me just write these particular legal provision. So when it comes to the first point, okay, so what did we discuss when it comes to first point? The distribution license may require the consumer to deposit sufficient security against the estimated payment, okay, which may become due to him in respect of electricity supplied. Okay, so the distribution license may collect the security deposit based on the estimated, okay, look at this, estimated payment which may become due, okay, based on the estimated payment which may become due by the consumer. Now, how much exactly is the amount which he is supposed to pay? Okay, based on that, this particular security deposit amount will be determined. All right. Then the next thing is the distribution license shall pay interest. Okay, so they'll not only be collecting this particular deposit amount, but along with this, they'll also be liable to pay some interest. The distribution license shall be liable to pay interest on the security deposit collected at a rate equivalent to bank rate or more. Clear? Okay, so the security deposit shall be calculated as under. Now, how exactly do we calculate this particular security deposit? Okay, so very simple. The total load, okay, so security deposit will be equal to load into load factor of category for which the consumer falls. Okay, so security deposit will be equal to load into load factor applicable for consumer, okay, into billing cycle plus 45 days into tariff rate. Okay, so whatever is the current tariff. This would be the formula to calculate this particular security deposit. Very simple. The total load into the load category for which this particular person would fall into what? The billing cycle plus 45 days into whatever is the current tariff rate. Okay, so don't worry, we'll be understanding how exactly do we calculate and all. Okay, so now the next important thing is accounting for security deposit. This is important. Okay, so what exactly are the journal entries which we need to pass? Okay, when we are receiving the security deposit, same way the electricity company also will be maintaining some provisions relating to these security deposit. What are the entries which they are supposed to pass? All right, so let us just understand these accounting treatment. The journal entries in the books of distribution license will be as follows. Okay, so first transaction would be on receipt of the security deposit. Very simple, right? This would be a liability for the electricity company. They'll have to repay this amount back. Okay, so what will be the entry? The entry would be like this: cash or bank account debtor to security deposit. Okay, so first transaction is on receipt of security deposit. Okay, the entry will be like this: cash or bank account debtor to security deposit. This would be the first entry. Then the next thing would be on making provision for interest accrued on security deposit. Okay, so they are supposed to pay this particular interest, right? Okay, look at this. Interest will be expense for them, and this is interest payable. Okay, interest payable on security deposit. So instead of calling it as accrued, okay, let us call it as interest payable. Okay, so if you guys feel that it is interest accrued, you guys might think that it is an income or receivable. Okay, so don't get confused. This is an expense and this is a liability. Okay, so this is an expense and this would be a liability. Clear? So just like how we record for outstanding rent, rent account data to outstanding rent. So here instead of calling it as interest account data to outstanding interest, we are just calling it as interest accrued. Okay, so okay, on making the provision for interest on security deposit. Interest expense account data to interest payable or interest accrued. This would be the entry. Clear? Then the next thing is on adjustment of the interest accrued on security deposit in customers or consumers bill. Okay, so from the bill, if I'm adjusting this, instead of literally paying this interest, what we do is we'll be adjusting in this particular bill. Okay, if the bill value, let's say interest accrued is 200 rupees. Okay, if his actual bill was, let's say, 1800, so we'll tell him you have received or you have earned some interest, so don't pay this 200 rupees. So this month just pay 1600, more than enough. Correct? So what will be the entry at that point of time? Look at this. When this outstanding amount is literally paid in the form of cash, interest payable account data to cash or bank account. But no, here what will we do? We'll be adjusting it from this particular turnover. Okay, so look at this. Interest accrued on security deposit account data to sales turnover. Okay, being adjustment of interest on security deposit in the consumer's bill. Okay, we'll be adjusting it in this consumer's bill. Okay, so let me just write this. Adjustment of interest accrued on security deposit in consumer's bill. So you can either call it as interest payable or interest accrued, both are one and the same. Okay, don't get confused. So what will be the entry here? The account whatever has been credited, we'll just be debiting it now. So interest accrued on security deposit account data to what? Sales turnover account. Okay, so to sales turnover account. This would be the entry. Is this clear? Just remember these three entries. When I collect this particular deposit, bank account data to security deposit, for creating the provision when this interest is payable, okay, interest expense account data to interest accrued on security deposit or interest payable on security deposit. Finally, when we are adjusting this particular amount, okay, so against this particular consumer bill, the entry will be very simple. Interest accrued on security deposit account data to what? To sales turnover account. This would be the entry. Just try to remember these entries. Okay, so let's look into this particular illustration now. Okay, so illustration number 13. So this will be based on those entries what we discussed just now. So consider the following information provided by ABC Power Supply Company Limited. Security deposit received from the customers on 1st October 2020 was 2 lakh rupees. Interest rate applicable was 8% for financial year 2021, 9% for 21-22. The accrued interest for the year is adjusted against the bill for the immediate next quarter. Immediate next quarter it is being adjusted. So journalize the above transaction for the year 2021 and 21-22. Okay, so let's just solve this. Just go through this question, guys. It is completely based on these entries what we discussed just now. Okay, so first thing is I'm collecting some security deposit on what day? 1st October 2020, right? Yeah, 1st October 2020 security deposit collected. How much amount did we collect? We collected 2 lakh rupees. What will be the entry for this? Bank account data 2 lakh to security deposit account 2 lakh. So this would be the entry for collection of this particular security deposit. Okay, so being security deposit collected. Alright, so after this, what are they telling? first year the interest which is payable is 8%, okay, so 8%, and then the second year if you see it is 9%, all right. Now when it comes to this particular interest, okay, look at this, when did we pay this particular deposit? The interest applicable for the year 2021 is 9%, okay. So first thing is you need to be calculating for the current financial year. Now when you're calculating the current financial year, will you be calculating for the entire year or only from October to March? You collected the security deposit on 1st October. So effectively when I'm calculating the interest right from the day of receiving or collecting the security deposit till the day of closure, okay. So from October to March, if you guys calculate October, November, December, Jan, Feb and March, okay, that is equivalent to 6 months. When you're calculating this particular interest, you need to be calculating at the rate of 8%, okay, for a period of 6 months, all right. So let's calculate this. So 31st March 2021, when interest is payable, what will be the entry? Interest expense account debtor, okay, and how much would be the amount? I have collected 2 lakh rupees, 2 lakh into 8% into 6 by 12. So how much do we get? So we'll be getting close to 60,000 rupees, right? Let's check once. 2 lakh into, yeah, 8,000 is what we'll be getting, okay. So 8,000 is the amount what we'll be getting. So this would be 8,000 to what? To interest accrued on security deposit. 8,000, this would be the entry, okay. So being interest payable on security deposit, this is the entry what I'll be passing on 31st March, okay. Now immediately after this, what are they telling? Is this interest paid in the form of cash? No, this interest is being adjusted in the consumer bill, okay. So what will be the entry for that? The entry for that would be 31st March 2021, again, interest on security deposit account debtor 8,000 to sales turnover account 8,000. So what will be the narration? Being adjustment of interest accrued against consumer bill. What am I doing? I'm just adjusting this particular interest on security deposit against the consumer bill. Look at the entries. The first entry, when I collected the security deposit, bank account debit to security deposit, interest expense account debit 8,000 to interest accrued on security deposit 8,000. So this 8,000 will get adjusted against what? Against the consumer bill. So interest accrued on security deposit account debtor to sales turnover 8,000, 8,000. Okay. So same way for the next year you will have to calculate it. Okay. So what are they telling over here? This will get adjusted in the next quarter, right? So this will not be like 30th March. This would be next quarter end. So that would be 30th June. So March, the financial year is getting over. April, May and June, next quarter. Read this information. So it is getting adjusted in the immediate next quarter, right? So that's the reason the dates are like this. After March, it is 30th June. Is this clear? I hope you all understood this. Anybody having any doubt, any confusion? I hope you all understood this. All right. So let's talk about this. Okay. Now, same way for the next financial year. Okay. So next financial year also we just need to calculate this. Okay. So how do we calculate this? Yes. Okay. So similarly for the next financial year, that is 31st March 2022. Okay. This is next financial year. So how about calculation of interest? The interest rate applicable for the next year. How much have they told? Look at this. The interest rate applicable was 8% for financial year 2021 and 9% for 21-22. So 21-22, if you see, it is 9%, and again over here, okay, so interest will be payable for the entire year, not just 6 months. Okay, so here this particular deposit money, don't you think it is used for the entire year? So 2 lakh into 9% would be the interest. So that would be 18,000. Okay, so this would be 18,000 over here and 18,000 over here, and this particular adjustment will happen in the next quarter, immediate ending of the next quarter, 30th June 2022. This amount would be 18,000 and 18,000. Is this clear? Okay, look at the solution. So this is a mistake, guys. Here also, if you see, they have done the same calculation. Don't you think this should be 18,000 and 18,000? So this should be 9%. Okay, and here also the same amount will be transferred, because they have clearly told the interest rate which is applicable for the next financial year. Don't you think they have told 9%? And in the first year we calculated for 6 months, because from the day of deposit till the closure of books of accounts. But don't you think in the second year this particular security deposit was held by this particular electricity company for a period of entire 12 months? You need not proportionately calculate for 6 months over here. Here it would be 18,000. Be careful over there. So this is a mistake. I hope you guys made the correction. This should be 18,000. Is this clear? All right. So let's talk about this reporting of the security deposit now. Just a moment. Yeah, look at this. Reporting of security deposit in the balance sheet of distribution license. So balance sheet of security deposit, okay, at the end of the accounting period should be disclosed as non-current liability in the balance sheet. Don't you think for this particular electricity company it is a liability? They'll have to refund this amount back, right? Along with this, they should also be paying some interest. So that is why whatever is the security deposit which is collected from the consumers, that would be a liability. Okay, so it will be shown as a non-current liability, okay, in the balance sheet, as the same is in substance non-repayable within a period of 12 months from the reporting date, and hence does not satisfy any of the condition with respect to current liability. Okay, so let's just write this. Reporting of security deposit in balance sheet. Okay, so how exactly do we report for the same in the balance sheet? Security deposit shall be shown as non-current liability on the liability side. All right. So what about the balance of interest? Balance of interest accrued on security deposit at the end of the accounting period should be disclosed as non-current liability in the balance sheet, as the same is not in substance. Same way. Okay, so balance in interest accrued on security deposit shall also be treated as non-current liability. Same way, just like how we treat the security deposit, below that whatever is the interest on this particular security deposit also will be shown in the same manner. All right. Okay, so the next thing is accounting. So this is the second special adjustment. Okay, this is the second special adjustment. Accounting for security deposit we have already discussed. Let's talk about this. Accounting for service line cum development charges received from consumers. Okay, so the next thing is accounting for service line cum development charges received from consumers. This would be the second special adjustment. Okay, this was the first special adjustment pertaining to security deposit. Okay, so this is the second special adjustment. All right, so let's talk about this. The service line cum development charges can be accounted and reported under any one of the following method. Okay, so one is accounting practice 1, accounting practice 2, and accounting practice 3. So we have got three different approaches for accounting for this particular service line cum development charges which is received from the consumers. Let's talk about the first thing. The service line cum development charges is accounted for as liability and subsequently proportionate amount is transferred to income statement during the expected life of the asset. Okay, so initially I am treating it as liability. So whatever is the total amount which I am receiving from the consumer, I will be treating it as liability. And what about subsequently? Subsequently, some amount will be transferred to my P&L account. Clear? Hope you guys understood this. Okay, look at this. Subsequently, it is transferred to income statement over the expected life of the asset. Let's talk about the second approach. So security line cum development charges is accounted as reserve. Okay, so as the amount is not refundable and disclosed under the reserves and surplus without transferring an proportionate amount, okay, to income statement during the expected life without transferring any proportionate amount. So the entire amount will be treated as reserve and it will just be carried forward for each and every year. Okay, so every year it will just be carried forward. All right. Okay, let's talk about the next thing. The third practice. First case, we are treating it as liability and proportionately each year will be transferring some amount to income and expenditure account, that is P&L account. Second case, we are just treating it as reserve without transferring any amount to income statement. Okay, what about third case? Okay, service line cum development is accounted as capital reserve as the amount is not refundable and subsequently proportionate amount is transferred to income statement during the expected life of the asset to match against the depreciation of the total cost of such asset. Okay, so let me just write this. The SLD, that is service line cum development charges, can be accounted in any of the following three methods. Okay, so first one is it shall be treated as a liability. Okay, look at this. The first thing is it shall be treated as a liability. Second case it is treated as reserve. Third case it is treated as a capital reserve. So subsequently proportionate amount is transferred to income statement. This is first approach. Okay, second approach is it shall be treated as a reserve. Okay, as the same is not refundable. Look at this. It is accounted for as reserve as the amount is not refundable and disclosed under the head reserves and surplus. Okay, it shall be treated as reserve as the same is non-refundable and shall be shown under reserves and surplus. Okay, so without transferring any amount to the income statement. So in the income statement, no amount will be transferred. Look at this. Without transferring any proportionate amount to the income statement, okay, during the expected life of the asset. The last practice would be what? It would be treated as capital reserve. It shall be treated as capital reserve and proportionate amount shall be transferred to income statement. Look at this. So proportionate amount shall be transferred to income statement during the expected life of the asset. Okay, so income statement. Hope you guys understood this. Just try to remember these three terms. Okay, so first thing is that it is treated as a liability. Second case, it is treated as what? It is treated as an asset. Sorry, it is treated as a reserve. Okay, so it is treated as a reserve and no amount will be transferred to income statement. So third case, it is treated as capital reserve, and yes, some amount will be written off each year by transfer to income statement. Alright, so let's have a look into this particular part. So they have given some note, let's just read this. Balance of capital service line contribution account at the end of the accounting period should be disclosed as capital reserve under the head reserves and surplus, as it is not refundable to the consumers, wherein the amount transferred to income statement is shown as deduction. So whatever amount is being transferred to income statement, that will be shown as a deduction. Okay, so you will be showing it as capital reserve under reserves and surplus. Whatever amount is being transferred each year to income and expenditure account or income statement, that is nothing but your P&L account. So that amount will be deducted from here. Very simple. Show it as reserves and surplus, that is capital reserve, and each year whatever amount you are transferring it to your income statement, that is P&L account, just deduct it from this balance. Okay, so amount which is transferred to the income statement will be shown as deductions. The amount transferred matches proportionately the amount of depreciation charged on the total cost of such asset in the statement of P&L account. So this particular amount, whatever you are charging to your income statement, should be equivalent to the depreciation. So that is why if you see over here, they have clearly mentioned that to match against the depreciation on the total cost. Okay, so equivalent to the depreciation amount is what will be transferring it to the P&L account. So under this method, the journal entries in the books of distribution license. Okay, so distribution license is nothing but the electricity company which is distributing this particular license. So what will be the entry? On receipt of this particular, okay, so service line cum development charges, bank account data to capital service line contribution account. Okay, so that would be treated as what? That would be treated as capital service line contribution. Okay, so the amount received shall be treated as capital service line. Okay, look at this, capital service line contribution. And shall be shown as capital service line contribution account. The same is not refundable. Okay, so the amount charged to income statement shall be equivalent to the depreciation amount, depending upon the life of asset. Clear? Now let's talk about the accounting treatment. So first transaction would be when the service line cum development charges is collected. So what do we name it as? We'll be treating it as capital received, right? Okay, so and we'll be calling it as what? We'll be calling it as capital service line contribution account. So the entry will be what? Bank account debtor to capital service line contribution account. So there we used to call it as bank account debtor to security deposit. Here we'll be calling it as bank account debtor to capital service line contribution account. Okay, look at this, capital service line contribution account. Then the next thing is on transfer of proportionate amount of this particular contribution to income account. So what will be the entry? So here I had credited this particular account. Now from this account I am taking some portion and I am transferring it to the income statement, that is my P&L account. Okay, so what will be the entry? The next thing is on transfer of proportionate amount to income statement. So income statement is nothing but your P&L account. So what will be the entry? The entry would be very simple. So here the account is showing credit balance. If I want to transfer, I'll just be debiting it. Okay, so the entry will be capital service line contribution account debtor to what? To statement of P&L account. Look at this. Capital service line contribution account debtor to statement of P&L. You can either call it as income statement, statement of P&L, or profit and loss account. Anything would be fine. So then the last accounting practice, we also have one more accounting practice. Okay, so this is for the third accounting practice. The fourth one would be what? Security line cum development is accounted for as reduction in the cost of non-current asset and depreciation is provided on such reduced cost. Okay, so what are they telling? So this particular amount, okay, is accounted for as reduction in the cost of non-current asset. Okay, from the non-current asset this amount will get deducted and depreciation is provided on such reduced cost. Okay, so the fourth practice. The security line cum development charges shall be reduced from the non-current asset, that is nothing but the fixed assets. Okay, non-current assets are nothing but the fixed asset, and depreciation provided on such reduced cost. Is this clear? So, and depreciation shall be provided on this particular reduced cost. Anybody having any doubt, any confusion so far? Is this clear? All right. Okay, these are the four approaches in which we'll be treating this SLD account. Okay, so security line cum development charges. All right. Okay, let's look into this third type of special transaction, that is accounting for grant received under APDRP. Okay, so currently our APDRP. Okay, so they are given the abbreviation over here, Accelerated Power Development and Reform Program. So Accelerated Power Development and Reform Program, if at all we are receiving any grant amount from them, how are we supposed to account for it? Okay, so this would be the third type of special transaction, accounting for grant received from Accelerated Power Development and Reform Program. Clear? Okay. So let's talk about this. Now, whenever we are receiving any grant from this particular Accelerated Power Development and Reform Program, so we have got some reform program. The main objective of this is to speedy, okay, development of this particular power sector. Okay, that is why the name is Accelerated Power Development and Reform Program. Okay, in a fast manner or in a speed manner, this particular power development sector has to improve. That is the objective. Okay, so grant received under Accelerated Power Development and Reform Program, okay, of the Ministry of Power, Government of India towards capital expenditure is treated as capital receipts and accounted as capital reserve and subsequently adjusted as income in the same proportion as the depreciation has been written off on the assets required out of the grant. Okay, so out of this particular grant, what these particular electricity company will be doing, they'll be purchasing some assets. So immediately the moment we receive this particular grant, okay, we need to treat it as capital reserve. Look at this. The adjustment is quite simple. It shall be treated as what? It shall be Government of India towards capital expenditure is treated as capital reserve. This is treated as capital reserve and subsequently, okay, adjusted as income, proportionate in the same proportion as depreciation would have been written off from the value of the asset which would have been purchased. Okay, so very simple thing. The grant received from, so accelerated power development and reform program shall be a capital receipt and has to be treated as a capital reserve. Okay, so this will be treated as a capital reserve under the liability side. Okay, so proportionate amount equivalent to the depreciation charged on the asset from the grant amount shall be transferred to income statement, that is statement of your P&L account. Clear? The same thing is being written over here. Okay, the depreciation for the year to be debited to the statement of profit and loss on the account, on the asset acquired out of the grant to match against the proportion of the grant transferred from capital reserve. Okay, so this particular point you will have to remember. The depreciation charge on the asset purchased should match with the amount transferred to income statement from capital reserve. Easy. Then the next thing is the unadjusted balance of capital reserve is disclosed under the head reserves and surplus in the balance sheet. You already know this. Okay, so unutilized amount, to that extent which we did not transfer it to income statement, that would be available where? That would be available under the capital reserve, which will be shown under reserves and surplus. This already you guys know it. In the cash flow statement, the grant received under accelerated power development and reform program is reported under financing activity. Okay, so in the cash flow statement, the grant received shall be shown under financing activity. I hope you guys remember this. Okay, so remember operating activity, financing activity and investment activity. So this particular grant amount, whatever we are receiving, will be shown under financing activity. At any time, if the ownership of the asset acquired out of this particular grant vests with the government, okay, the grant, that is capital reserve, are adjusted in the carrying cost of such asset. Okay, at any point of time, if these particular assets which we acquired with the help of this government grants, okay, so if it is belonging to the government, okay, at that point of time the same has to be adjusted. Okay, so this particular government grant has to be adjusted from that particular cost. Okay, so at any point of time, if the assets acquired by the grant amount vest with the government, then the grant amount shall be adjusted from the carrying cost. So in that case, this particular grant amount will get adjusted from the carrying cost of this particular asset. Alright. So let's look into this last point. The grant in aid assistance received by the utility under APDRP and the utilization shown under the head capital expenditure made during the year is not considered for calculation of annual revenue requirement of the utility for the year. Okay, so not an important point. This particular point, just remember this much, that the grant amount will not be considered for the purpose of calculation of this annual revenue requirement. Alright, so let's look into this fourth adjustment, that is accounting for depreciation. Okay, so when it comes to accounting for depreciation, let us understand the accounting treatment. Okay, this is the fourth special category. Okay, when it comes to depreciation on these assets, how exactly are we supposed to show? Okay, so let's just understand this. With respect to accounting for depreciation, the following points are noteworthy. So, as per Central Electricity Regulation Commission, okay, so it has been stated that the tariff policy, that the depreciation rates for the asset shall be specified by the Central Electricity Regulatory Commission, okay, and these rates of depreciation shall be applicable for the purpose of tariff as well as accounting. So, for the purpose of accounting as well as determination of the tariff, these particular rate which is prescribed by the Central Electricity Regulation Commission has to be followed. Okay, so the depreciation rate shall be prescribed by the Central Electricity Regulation Commission. Okay, same rate has to be followed for the purpose of determination of the tariff as well as for the purpose of accounting. Okay, both the cases same rate of depreciation has to be followed. The Office of Comptroller and Auditor General of India, C&AG, okay, has expressed an opinion that the power sector companies shall be governed by the rates of depreciation as notified by the Central Electricity Regulation Commission for providing depreciation in respect of generating the assets. Okay, same thing is being given by the C&AG also. The first point, very simple, the rates of depreciation will be prescribed by whom? It will be prescribed by Central Electricity Regulatory Commission. So, same point is being justified even over here by the C&AG. Okay, that is Comptroller and Auditor General of India. Okay, so let's just look into this. Okay, Central Electricity Regulation Commission prescribes the straight line method and the rate specified in Appendix 1. Okay, for the assets of generating station and transmission system, okay, provided that the remaining depreciable value as on 31st March of the year closing after the period of 12 years from the effective date of commercial operation of the station shall be spread over the balance useful life of the asset. Okay, so here when it comes to the method of depreciation, what they are telling is it will be a straight line method which will be used. Okay, so here we'll be using the straight line method. That is what is being said over here. The Central Electricity Regulation Commission has prescribed straight line method of charging depreciation. Okay, so which will be charged period of useful life. Okay, so then they have given you how exactly are we supposed to calculate this particular depreciation for the purpose of tariff as per this 2019 regulation. Okay, so let's just look into this. Okay, calculation of depreciation shall be done considering the following points. Okay, so how exactly are we supposed to calculate this particular depreciation? So these are the points what we'll have to remember for the purpose of calculating depreciation. The first thing is the value base of this particular, for the purpose of depreciation shall be the capital cost of the asset. So the base value shall be what? Shall be the capital cost of the asset, whatever is the cost of the asset. And then the next thing is land other than the land held for the lease and the land for reservoir, okay, in case of hydro generating station shall not be depreciable asset. Land will not be treated as a depreciable asset. Okay, so this shall not be treated as depreciable asset. Depreciation shall be calculated annually based on straight line method, whatever is the rate which is being prescribed in Appendix 1. Okay, let me just write these points. Okay, so the following points shall be understood or shall be okay. What is the first point? The first point is the value shall be the capital cost on which depreciation shall be charged. Clear? And then the second point is what? The second point is land. Okay, so land other than the land held for generation of the power. Okay, so other than the land held for lease or the land for reservoir okay, so land for reservoir. In case of hydroelectricity station, okay, so in case of shall not be a depreciable asset. So basically what they are trying to convey over here is any land other than the land which is held under a lease, okay, or land for reservoir, in case of hydro generation station shall not be depreciable asset. That is only those lands, okay, which are used for the purpose of generating this particular electricity, okay, so on that will be charging depreciation. Other lands, okay, that is the land other than those lands which are held for lease, okay, or other than those land which are held as land for reservoir, okay, so will not be charging any depreciation on such land. Clear? Okay, so then the third point would be depreciation shall be charged based on straight line method, okay, so SLM method. The next thing is residual value of the land, okay, shall be considered as 10 years, okay, so what is residual value? So residual value of the asset shall be considered as 10 years, the salvage value of asset shall be considered as 10%, okay, so salvage value shall be considered as 10%. A residual period shall be considered as 10 years. Okay, so then the next point is depreciation shall be allowed up to a maximum of 90% of the capital cost of the asset. The reason is 10% will be treated as salvage value, right? So only on the remaining 90% will be charging the depreciation. Okay, so provided that salvage value for income tax, sorry, for IT equipment and software shall be considered as nil and 100% of the value. Okay, so with respect to understand this particular point, what are they telling? Depreciation shall be allowed only up to a maximum of 90% of capital cost, because 10% will be considering it as salvage value, provided that salvage value of IT equipment and software shall be considered as nil. So for IT software and equipment, if we are considering the salvage value as 0, don't you think on the entire 100% will be charging the depreciation? Clear? So same point, I'll just write it over here. Depreciation shall be charged on 90% of the capital cost, okay, as the salvage will be 10%. Okay, however, in case of IT equipment and software, salvage value shall be nil and depreciation shall be charged on entire 100% of capital cost. Simple. So depreciation over here will be charged on the entire 100% of the capital cost. So of the asset shall be considered depreciable. Okay, it's actually the same point. On repayment of entire loan, the remaining depreciable value shall be spread over the balance useful life. Okay, when the loan is repaid, okay, completely, at that point of time, whatever is the balance depreciation, that will be spread over the remaining entire life. Next thing is depreciation shall be chargeable from the first year of the operation. In case of operation of the asset for a part of the year, depreciation shall be charged on a pro rata basis. All these points you already know it. So depreciation shall be charged from the first year of the operation, and again in the first year, if this particular operation was not carried on for the entire year, at that point of time proportionately you will be charging depreciation. Okay, now let's say in the first year, okay, the asset was not put to use at the beginning of the year, probably at the mid of the year, then proportionately for 6 months or half a year we'll be charging the depreciation. Easy? All right. So here are the rate of depreciation which has been given. Okay, so this is appendix 1 which we are talking about. Look at this rates. Depreciation rate, salvage value will be 10%. Okay, and the method what we'll be using would be straight line method. So land, okay, under full ownership, for land as we already discussed, 0% depreciation, that is land other than lease. Okay, so land which is under lease, yes, we'll be charging depreciation, that would be 3.34%. Okay, so land into 90%, because 10% will be the salvage value, land into 90% into this particular rate. Asset purchase new, okay, so plant and machinery, okay, so cooling towers, and then hydraulic works forming part of hydro generating station, everywhere it is 5.28, here it is 3.34 and then 5.28%. So building and civil engineering works, temporary erections such as wooden structures and others. Okay, so temporary structures, okay, it would be 100% depreciation, others it would be 3.34. Temporary structure, the objective is what? Why do we call it as temporary? Because these things will be demolished after 1 year. Okay, so that is why the tenure is very less. So that's why entire value will be charged as depreciation in the first year itself. Okay, so that's why 100%. Otherwise it is 3.34. The same thing what we charged over here for land. Land 3.34, machinery it would be 5.28, and again it is 3.34. Majority of the cases if you see it is 3.34 and 5.28. Okay, the rate of depreciation. Clear? Okay, so 3.34 for land and then 3.34 for building. Okay, so other than temporary structure. All right, so then we have got transformers, kiosk, substations, equipment. Okay, so transformers and all, it is 5.28. See, as I already told you, just two rates is what you need to mention. Okay, or remember 5.28 and 3.34. 3.34, okay, 5.28. So 3.34 will be applicable only in two cases. Okay, so only in two cases over here. Okay, so that would be what? One would be land under lease, another thing would be building other than temporary structure. Other than that, if it is building for temporary structure, 100%. Okay, look at this. All the equipment and all, if you see, okay, so switch gear including cable connections, lighting accessories, batteries, overhead lines, meters. Okay, so everywhere if you see it is 5.28. okay, and then self-propelled vehicles. Okay, if it is vehicle, it would be little high, 9.5%. okay, so 9.5% would be the would be the depreciation rate for vehicle. All right, and then air conditioning plants. Okay, so static, wherever it is plant and equipment, it is 5.28 only. Okay, so look at this. If it is portable, it would be 9.5. okay, then office furniture, okay, street light fittings 5.28, others it would be 6.33. And then apparatus let on hire. Okay, so other than motor it is 9.5, motor it is 6.33. So communication equipment again 6.33, IT equipment including software it is 15%, any other assets not covered above it would be 5.28%. okay, so let me just write these depreciation rates in the notes. Depreciation rates as per appendix 1. all right, so here if you see we have got different rates of depreciation. Okay, so let us just classify in this way. So we have got like 3.34%, depreciation at 3.34%. Now this particular rate of depreciation will be applicable for what? Land under lease, building other than temporary structure, Okay, building other than temporary structure. So do we have anywhere else wherein we'll be applying this 3.34? Nowhere else, right? So this is one rate of depreciation. Okay, so the next rate of depreciation would be depreciation at the rate of 5.28. Okay, so 5.28, this is the case wherein majority of the asset will be charged. Okay, so first thing would be what? Look at this. All your plant and machinery, whenever they say plant and machinery, everything will be charged depreciation at 5.28. Okay, I'll just be writing the broad category. Okay, so plant and machinery. Look at this. Plant and machinery, anything for that matter. Cooling towers. Okay, hydraulic work. Cooling towers. Hydraulic workstation. Okay, so then transformers, switch boxes. Look at this. Substation. Okay, so transformers, kiosk, substation, equipment and other things. Okay, it is 5.28. Switch gear including cable connection. Okay, so lighting accessories. Okay, lighting accessories, batteries, everything else. Okay, so meters. All these things. Okay, so you'll be charging depreciation at 5.8. Okay, air plant, static air conditioning plant. Okay, so static is something which will be stagnant, it will not be moving. If it is portable, look at the rate, it is 9.5. For portable, the life would be little less. Okay, so that's why we'll be charging more rate of depreciation. Okay. So 9.5 will be talking about it. Okay, so then we have got 6.33 also for quite a few assets. Okay, so other assets. Okay, so if it is not mentioned over here, it would be 5.38. Then the next thing would be depreciation at the rate of 0.33 percentage. Okay, so for what and all assets will we be charging depreciation at the rate of 6.33? Very simple. So one would be office furniture. Okay, so other office furniture. Here there will be one more thing, street light fittings. So the fittings which is used in street light, okay, again 5.38 would be the rate of depreciation. So other furniture 6.33, that is other than street light fittings. And then we have got motors. Okay, so motors and communication equipment. Motors. That's all. So we have rate of depreciation that would be 9.5. Okay, so depreciation at the rate of 9.5. I'll just write it over here. So 9.5% will be for self-propelled vehicles. Okay, so for vehicles, and then portable air conditioning plant. Okay, so portable air conditioning plant. Okay, so here it is, if you see it is static, that would be stagnant, that will not be able to move. Okay, whereas portable air conditioning plant, it would be anything which will be moving. Okay, so same way with respect to vehicle. Okay, vehicle also moves, right? Okay, we'll be charging 9.5%. Okay, so apparatus let on hire. Okay, so apparatus on hire or apparatus other than motor. Okay, so these are the assets which will be charged at, which will be charged depreciation at the rate of 9.5 percentage. Okay, and lastly we have got 15 percentage depreciation. Okay, so 15 percentage depreciation, this would be for IT equipment and software. Okay, so IT equipment and software, it would be 15 percentage. Just remember this particular chart. And here, okay, so how much would be the salvage value? Salvage value shall be nil for this IT equipment and software. Clear? Hope you guys understood this. Okay, so these are the special rates of depreciation, okay, which has been prescribed under this particular appendix 1. So we have got 3.34, 5.38, 5.38 it is majority, 3.34 easy way to remember. Okay, so land under lease as well as building other than temporary structure. Okay, so anything other than this particular land on lease, it would be 0 percentage. Okay, so 6.33 over here, 9.5 over here, and then 15 over here. See, if you guys are able to remember, okay, 6.33, 9.5 and 15, okay, and this this particular rate, okay, 3.34. So other than that, everything else would be 5.38 percentage only. All right. Okay, so let's look into this next point, where life of a particular asset, okay, is less than the useful life of the project, then the useful life of such asset shall be considered as per the provision of Companies Act and subsequent amendment there. Okay, so how do we calculate the weighted average rate of depreciation? Out of these things, how exactly do we calculate this weighted average rate of depreciation? Okay, so let's just understand this. So calculation of depreciation on individual asset other than freehold land, okay, at a rate as per appendix 3. Okay, so cost of asset into whatever is the prescribed rate of depreciation. Step 2, calculate total depreciation of all the assets, okay, other than freehold land, that is the sum total of depreciation calculated on each asset. Depreciation on asset 1, okay, plus depreciation on asset 2, like that, okay, other than freehold land. First calculate depreciation on freehold land, okay, so cost of the asset into rate of depreciation, then calculate the total depreciation of all the assets other than freehold land. Okay, so calculate the total cost of all the assets other than freehold land. How much exactly is the cost of asset other than freehold land? Then total depreciation on all the assets divided by the total capital cost into 100. Okay, so it's very simple. I'll just write this over here, calculation of weighted average rate of depreciation. Okay, first step is calculate the depreciation on freehold land. How do we calculate the depreciation? So here depreciation shall be equal to cost into depreciation rate. Okay. Second thing is calculate the total depreciation okay, so total depreciation of all other assets, okay, of all the assets other than freehold land. Clear? So after this, calculate the total cost of all the assets other than freehold land. Okay, so finally you guys will be able to calculate the weighted average rate of depreciation. Okay, so weighted average rate of depreciation will be equal to total depreciation as per or total depreciation other than freehold land divided by total cost of all the assets other than land into 100. Is this clear? Is there any doubt, any confusion so far? So let us now understand with the help of this particular illustration as to how exactly do we calculate this weighted average depreciation rate. Alright, so let me just read this illustration number 14. So from the following, calculate the weighted average rate of depreciation considering the rate as per appendix 1. Okay, so land under full ownership. Okay, so here this is freehold land. Okay, land under lease. Okay, 14 lakh 30. On this land, do we charge any depreciation? No. Okay, we will not be charging any depreciation. What about the other land? This would be 3.34 percentage. On this land, it would be 3.34 percentage. So building and civil engineering work other than Kacha roads, okay, so railway slidings, temporary erections, okay, so temporary erections, you know, 100% would be the rate of depreciation for these stuff. IT equipment, okay, so this would be the last thing, okay, 15%, right? Yes, look at this. IT equipment, it would be 15%. Okay, so then we have got self-propelled vehicles. Okay, so vehicle it would be 9.35, sorry 9.5. Okay, vehicle it would be 9.5. Portable air condition. Okay, anything which is able to move. Okay, so that would be 9.5. Okay, so these two, the rate of depreciation would be 9.5. Okay, apparatus other than motors. For motors, there is separate thing. Motors it is 6.33. Other than motors, if you see, it is 9.5. Okay, so communication equipment, everything is been written, guys. If you see communication equipment also, it is 6.33. Office furniture, okay, so furniture with respect to street light, if you see, it is over here 5.38, whereas other office furniture it would be 6.33%. So plant and machinery in generating stations, okay, so other than that, everything is 5.38. So cooling towers also 5.38, hydraulic 5.38, transformers and switches 5.38, lighting accessories 5.38, meters 5.38. Okay, so static air conditioner again 5.38. Look at this, static light fitting and static air conditioning plant, it is 5.38. So street light fittings also it is 5.38, if you guys can see. Okay, so it is 5.38. Vehicles other than self-propelled vehicles. Okay, so look at this. When it comes to vehicles other than self-propelled vehicles, here it is. I'll just show you guys. Yeah, look at this. Self-propelled vehicle, it is 9.5%. Other than self-propelled vehicles, okay, so look at this, somewhere over here they would have given. Yeah, any other assets for that matter, it would be 5.28 only. Okay, so 5.28 only would be the rate of depreciation. For this also 5.28. So all these cases 5.28 would be the rate of depreciation. Is this clear? So here it is 0, here it would be 3.34. So building, you guys already know. Okay, so building it would be how much? Look at this. Building for temporary structure it would be 100%. Other than temporary structure it would be 3.34%. Alright. Okay, so you just need to calculate the depreciation. Okay, so they have given over here the rate of depreciation, if you guys can see. Okay, so what they have done is they have just applied these rates, you know, the cost, and then depreciation is being charged. Okay, so for all the assets they have calculated. Okay, so let's just do the same thing. So this is illustration 14, right? Yeah. So what I'll do is I'll just write the name of the asset. Okay, and then here I'll just write the cost, the depreciation rate, and then depreciation amount. Okay, I'm just going to write the rate of the depreciation as well as the depreciation amount. All right, just a second. Okay, first let me just make a list of the information whatever has been provided. Okay, so they have given you a list of quite a few assets. So land under full ownership. So this is freehold land. Okay, so then we have got land under lease. Okay, so after this we have got building and civil engineering work. Okay, so railway sliding. All these are category of building only, if you guys can see. Okay, so then we have got temporary structure. Yeah, after temporary structure, what do we have? We got IT equipment. Okay, after IT equipment, we have got self-propelled vehicles. Okay, so portable air conditioning plant, portable AC plant, apparatus other than motors. Then we have got motors let on hire. Then we have got communication equipment. Then we have got office furniture. So office furniture also 6.33%. We have got plant and machinery. This would be 5.38. Okay, so cooling towers. So hydraulic work. Transformers and switches. Lighting accessories. Okay, so they'll be using the lights and all, right. So we have got meters. We have got static AC plant. Okay, static AC plant, the rate of depreciation will be little less, 5.38, whereas portable, okay, the one which can move, the rate of depreciation will be 9.5. Okay, so street light fittings. Then we have got vehicles other than self-propelled vehicles. Okay, so these are the list of the assets. Okay, now for these assets, I just need to write the cost and then I'll be writing the depreciation rate. So what is the cost? Let me just quickly write these things. So 14,30,000. Then we have got like 4,30,000, 33 lakh, 40 lakh, 10 lakh, 20 lakh, 30 lakhs, 25 lakh, 15 lakh, 2 lakh, 5 lakh and 5 lakh. Then we have got like 2 crore 52 lakh. Then we have got like 10 lakh. So after this 10 lakh, we have got 20 lakh. Two crore 5 lakh, 42 lakh. I'm just writing the amounts whatever has been given in your question, guys. Okay, so then we have got like 20 lakh, 1 crore, 47 lakh 85,000, 2 lakh 15,000. Okay. Now let us just write this particular depreciation rate. See, totally we have got like 4 or 5 rates of depreciation. Okay, so we have got 3.34. Okay, so 0, 15, 9.5 and 6.33. Okay, so 6.33, 3.34, 5.38. All right. So let us just apply this particular rates. I've already written the rates over here. I'll just be writing the same. So here it would be 0%, 3.34. 3.34 percentage, again 3.34, 3.34, temporary structure it would be like 100 percentage. Okay, so after temporary structure what do we have? We got IT equipment which would be 15 percentage. Then we have got like self-propelled vehicle, okay, 9.5 percentage, AC, okay, portable AC 9.5 percentage, apparatus other than motors would be 6.33. So motors also, just a second. Now this would be 9.5, motors would be 6.33. Yeah. So motor 6.33, communication equipment we have got 6.33. Okay. So office furniture equipment 6.33, plant and machinery it would be 5.38. Cooling towers, all these things, okay, it is 5.38 only. Okay, so everything is 5.38. Okay, so now I just need to apply, okay, these particular rates of depreciation, and I just need to calculate the depreciation amount. Okay, so let us just calculate this. All right, so I'll just be multiplying these two, this multiplied by the rate of depreciation. Let's see how much is the total depreciation which we get. All right, so this would be the amount of depreciation. Let us just cross check. 14,362, 1 lakh 10, 1 lakh 33, 10 lakh, 3 lakh, 285, 237, 142, 12, 660, 31, 650, 31, 650. Okay, so all these things it is actually 5.28, right? I have written 5.38. Look at this rates of depreciation. It is, yeah, it is 5.28. Okay, so these rates, it's not 5.38, just change this. This is actually 5.28. So all these cases wherein I have written 5.38, it should be 5.28. Okay, so look at the total depreciation. Total depreciation would be this amount. Okay, so 59 lakh 89,862 would be the total depreciation. Check out the solution. The same amount, right? 59 lakh 89,862. Same thing we got over here. And what's the total value of the assets? This would be the total value of the assets. First thing is other than freehold premises. So from this I'll just be eliminating the freehold premises. Okay, so total value of assets other than freehold land, okay, will be how much? This would be 902, 60,000 minus, what's the value of the freehold land? 14 lakh 30,000, right? Okay, so 14 lakh 30,000 rupees is the value of the freehold land, minus 14 lakh 30,000. So how much do we get? So this amount minus 14 lakh 30,000. Okay, so 888 30,000. Okay, this would be the value. Okay, so this would be the value which we get, 888. Now, how do I calculate the weighted average rate? Weighted average rate of depreciation will be equal to the depreciation amount, which is 5989862, divided by what? Divided by the total assets other than freehold premises, that is 888 30,000. Okay, into 100. Just solve this. This amount divided by 888 30,000 into 100. Okay, 6.74 is what we are getting. 888 30,000, correct. Okay, 6.74 percentage is what we get, guys. Okay, so it is not 6.47, it is 6.74 percentage. Okay, so 6.74 percentage is what we get. Calculate if you want, just solve this. This equation, if you solve, you will not be getting 6.47, you will be getting 6.74. This is actually 6.74 percentage. Is this clear? Hope you guys understood this. Anybody having any doubt, any confusion? All right. So a little more aspect has been left over and quite a few illustrations are left over. Okay. So probably in the next class, we should be able to complete this electricity company. Okay. So by that time, just go through whatever we have discussed in today's class. All right. Thank you so much, guys.